sorts of impact finance as well are anchored in one of these three altering versions and terms of that. And it's best when you're starting to look at this of like what is the closest anchor. So when you're thinking about social impact, there's three sources of capital that are there. There's equity where you're expecting and participating in some sort of upside. There's debt where you're saying here's some sort of structured repayment. And there's grants which you're saying I'm most likely not going to ask for a version of impact. Most sorts of impact finance as well are anchored in one of these three altering versions and terms of that. And it's best when you're starting to look at this of like what is the closest anchor. So when you're thinking about social impact bonds, like called bonds which are implying it's debt, but you're basically saying it's a redeemable grant. In case you meet targets, I may actually have to pay it back. Someone else will cover the fees. So there's a close proxy to that. There's other versions of impact finance. You're saying there's debt required to set up a completely new sort of manufacturing facility, which we think will change the cost structure of technology. Very important thing to do, creates a lot of impact. So we do longer tenure debt than is a traditional debt. A lot of the Norwood type of European battery companies we've seen needed probably greater portions of that. I'm saying just move out maturity so you get time to build out some parts of these things. Is available, but definitely an area that is in pockets, and more of that being available will be powerful. And the third is then saying how do you get programs that are actually just trying to trigger creation of ecosystem.